Great afternoon or great evening or wherever you are. I want to give you guys some market update information. As you can see, the markets are very, very unstable, but I want to go over why, and I'm going to go over a strategy that I'm actually doing, which I haven't done in God knows how long. Oh my God, I cut my foot. Uh, so the markets are unstable for multiple reasons. Number one, you do have the Ukraine situation, which it may come to a. Hopefully, they can negotiate a deal and the war will be over, and then the market will get back to being bullish because we're spending billions and billions and billions of dollars across the globe to finance this stupid war. Because somebody had in their head that they just want more land and they weren't content with what they already had. So let me go take from you. That's old as time, but it never made sense to me just to be greedy. And so, but whatever. Moving on. The second thing is that I told you guys on the Sunday video, but a lot of you guys, when you start trading during the week, the last thing on your mind is what Uncle P told me on Sunday. He told me, but I understand because your emotions kick in and you're just in high gear trying to win some trades. But what's happening is that the market is completely unstable because this week is very, very critical to see what the Feds are going to do. You got on tomorrow, I think it's tomorrow, you have the Feds coming out with the Fed minutes, which is what the global markets are on hold, wondering, okay, is the Fed's going to actually look to raise interest rates or lower interest rates? And because the dollar is the global currency of the world, anything that happens to the dollar is going to cause interruptions in the markets across the globe. So that's the reason why when the Fed interest rates or Fed minutes come out or something like that happens, that's where the problem comes in. Now, in addition to that, on Friday, you also have Fed Chairman, I believe it's Fed Chairman Powell. Jerome Powell is going to be coming out speaking. Now, there's a couple of things to be considered on that. Not only is it a discussion about interest rates, which will give a global market shakeup, but in addition to that, whether he's going to still be remaining as the Fed chairman or not, or whether he's going to be fired, and if so, who he's going to be replaced with. Why is that important? Because, the Fed chairman is just as powerful as the president, in my opinion. Okay, I'm going to repeat that again. When it comes to trading in the markets, the president and the Fed chairman have just as much power. Because this is why President Trump is having a fit, because this is the one area of power he has no control over. Get what I'm saying? He cannot touch it. He cannot touch the Fed Chairman Powell, and therefore he cannot control what happens in the financial markets. Only the Fed Chairman Powell can do that. Only Fed Chairman can do that. And Fed Chairman Powell is, upsetting the markets because, for an example, and this is actually, something you can look up for yourself. We owe trillions of dollars in debt, but we also, which never makes sense to me, and maybe because I'm not the financial economist I should be, but we also have control over the interest rate, and as a result of that, just imagine let me give it to you like this. Imagine you get a credit card from Capital One, and they say that your initial rate going to be 13%, okay? But you say, no, I think I'm going to adjust my rates to 9%, and they can do nothing about it. Imagine that. That's equivalent to what Fed Chairman Powell has the power to do. So that's what one of the arguments is. Now, I know there's some pros and cons, and there's some balancing that has to be done. I was listening to another Fed board member out of San Francisco this morning. She was talking and how they have to balance job rates with the fiscal policies and so. So I get all that, but just imagine that you're paying an extra $200 or $300 billion a year in interest because you don't want to lower your own interest rates against your own debt that you owe to everybody else. Okay, doesn't make sense to me, but that's power. So this one person has control over all real estate loans, base rates. They call them base rates. So your base rate, which is what you use when you go to get a loan, they will take a look at the base rate of what is the current rates going for getting a home loan. And then from there, they'll pull your credit report. And based on your credit report, whether it's good or bad, they will bump up the rates, add a few extra points on top of that. Okay. But all of the base rates for car loans, credit cards, and many of these other things, they're set by the feds. What is the going rate? Okay, and then whatever company you're dealing with and your credit report, they can bump it up or down and adjust it based on that. That's what it's like. So when it comes to our national debt of several trillions of dollars, if he even decided to lower it by 25 basis points or 0.50 basis points, which is a basis point, 0.25 is like a quarter point, 4 quarters in the dollar, one point. So let's just say right now we're at around 4% interest rates. A quarter point would drop it by a quarter, which would make it 3.75%. Doing that alone will save us several billions, hundred billions of dollars a year in what we're paying back in interest. So it's kind of like the U.S. has the ability to set its own interest rate for the loan that it's due, and we control that. You get what I'm saying? This is why a lot of people are trying to push push the interest rates down to 1%. I think Canada's at 1%. Japan is at 0.5% interest rates or whatever, something like that. So why are we're kind of like at the highest rate in the world at 4%, And so why are we doing that? Especially if we owe all these trillions and we're trying to cut debt. The first way to do it, if it's to cut down the interest rates, therefore the amount of interest, the $300 or $400 billion a year we're paying in interest, we can cut that down substantially, and the same money that we were paying towards just paying interest on the loan, then that money can go towards paying down the debt. Now, here's my personal opinion on paying down the national debt. I don't give a crap. You know why? Because here's something that's been going on for the longest. If you guys really think outside the box, and again, this is why I'm glad I'm not into politics, and I'm just talking to you guys, giving you a little touch of wisdom, and I'll let you go. Just enjoying the sunshine and the beautiful water, but I just seen the water move, but I don't see no ducks sitting on the water. Did y'all see that little streak? I'll point it out. See that little streak right there? I hope it ain't no alligator in there underneath the water. That's why I look in the water, but I ain't getting in it. All right. But anyway, my personal deal is this: how many years since you've been born, you've been hearing about the national debt, pay down the debt, pay down the debt. And no matter how much money comes into the country or goes out of the country, the debt is always there. And when we look at the debt, how much of that is actually benefiting me personally? I'm constantly paying into paying it off, but where's the benefit for me? You know what I mean? So whatever. I know people get all up in arms about it, but that's just my thought. I was like, okay, if I go get a credit card from Capital One, I'm benefiting from that debt. So if I say, okay, you know what, I'm gonna go get a credit card for $1,000 and I want to use 500 of it to go get some groceries and another $50 for gas. Now I owe a debt. Okay, yeah, I got some benefit out of it. But we've been having a national debt for God knows how long, from my birth and from your birth. And we always arguing about national debt and the taxpayers' dollars are being wasted and I've been hearing that since I was born. And the truth is, they're going to waste money anyway. Whether it's Republican or Democrat, it doesn't matter. They all waste money. They just make you mad because it ain't their party doing it. But they all do the same thing, which contributed to the national debt that you and I have to pay for, even though when you look at you and I's lifestyle, we ain't getting a single benefit from this. None. We get no benefit. None. We don't get no benefits from this. We have to slave labor to pay it back, whether you're an entrepreneur, whether you work at a job. You got every dime you make, they want to keep an eye on it so they can see how much of your money that you work hard for can they snatch. And then from there, they pay into the debts they create, Democrats and Republicans. This is why I don't get into politics. So miss me with all that. When I will start caring about the national debt, when the national debt start caring about Uncle P. Because right now, the national debt, that's debt y'all creating. Y'all keep doing all this stuff that I ain't even asked for. You don't even ask for it, but I'm responsible to pay it back. And then my kids, my grandkids, and so forth. So the heck with this national debt stuff, man. When it starts mattering to me and my family and we see direct benefits, then okay, now I start worrying about it. But in the meantime, man, y'all just robbing the people of their hard-earned money just so y'all can just have a splurging party sometimes, in my opinion. Now I know there's a military, and I get all this and that. Don't do all that. I get all that, but you and I got to admit, a lot of the stuff that we constantly hearing about these spendings and this and that and this, Republicans and the Democrats, they all do the same thing. They have control over trillions of dollars that come into the coffers. You think they ain't gonna sit there and play with that money? Come on, man. Come on. So anyway, I don't even know why I got in there. I just really was supposed to be talking about what's going on with the global market. But anyway, going back to what I was going to say, and I'll wrap this up. The global markets are in a hot mess this week because of all these three different big events. All three of these are huge. So if we can stop the Ukraine and Russia war, that'll be huge for the market. That'll be bullish. If the key points on tomorrow's announcements from the Fed minutes doesn't do anything, then we should be okay. Then you just got to ride out until Friday when the man himself, which is, in my opinion, financially, he's just as powerful as the president, because the president can't even touch him. He can't say nothing. The president can cry and get mad, but he can't touch him. So Fed Chairman Powell comes out on Friday. So this is why, if you've been trading, whether the futures market or whether you've been trading in the known markets, blah, 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 it's been a hot mess. Now, here's what I have been doing for my personal portfolio, okay? My personal portfolio. Here's what I've been doing. I have been doing something I haven't done in a long time. I haven't done this in years, and that's me pushing my viewpoints of doing my analysis strictly from the 4-hour and the weekly time frames. 4-hour, let me rephrase that. I'm still doing my 4:15 strategy, 4-hour, wait for the alert on the 15-minute. Okay, I'll still do that. Same thing. Okay, but as far as my take profits and stuff like that, I'm actually using either the daily, or now I'm actually using the weekly time frame to push out, and which means I have to use a little bit bigger stop loss. But my take profits, I'm using the weekly levels to see, okay, where's this going? Now, here's where this is going to have to, here's where this is going to come into play. The play is that I'm giving it enough room for all this volatility to play out, but because I'm so far out, I can actually see more safer market structure, because when you look on the higher time frames, and I'm not the professional in this. Dr. Elvis is. He's a, he's a pro at all this. Me, I'm just doing this to adjust to this market volatility for the time being. But when you go out to the weekly and start seeing pointing out, drawing up levels from there, you're going to have a bigger stop loss, of course. And but the risk to reward can be so huge. Like one of my trades, I think I'm risking like 50 or 60 points with a take profit of like 300 points, pips, 300 pips to 60 pips or risk, something like that, so I can hold that thing for a good minute, I ain't even tripping. So, and then I'm just lowering my lot sizes substantially. So it's kind of like I'm really not trying to hit home runs. I'm really just going to execute patience. The only difference is for a lot of you guys, and I was listening to my one of my mentors, Swaggy C. I've been rocking with him silently behind the scenes. Just following his work, studied his work as well. As many others, I told you guys, I'm just a student of the game. And even he was mentioning that he did a video recently where he said he had took 192 trades to make $500,000, and then he took 10 trades to make $1 million. Okay, think about it. 192 trades to make $500,000 versus 10 trades to make $1 million. So if you haven't seen that video, go ahead and check that out. And then what I'm talking to you about will make complete sense. The only difference is you're just going to have to not be in a rush to quit your job, because a lot of you guys are actually very, very good traders, but you're in a rush to quit your job. So, going out to a time frame that actually really does make sense to you. But the fact is, you got to hold that thing for maybe a week, 2 weeks, 3 weeks, or maybe a month. That's just not jiving with you, because you're so used to getting in and out of trades the same day. But in choppy markets like this, it's better for you to get the distance so you can see, okay, what is really going on outside of the noise in the market? What's my best approach? And when you go that best approach way, then you'll be fine. Okay. So either way it goes, just want to share some thoughts with you guys. Peace and hair grease. Talk to you later.